Hello, coming on now to task 4 of the second AAT FAPS paper. 24 marks, it's a biggie, about producing financial statements for sole traders and partnerships. True or false? In partnership accounting, the current account shows the long-term investment in the partnership. So that's going to be false because, of course, it's called the capital account. The current account is a type of capital account which shows the day-to-day transactions, so like the salaries, the interest on drawings, interest on capital, etc. The financed by section of a partnership statement of financial position includes the balances of the capital account and current accounts. Yes, because they're both types of capital account. In partnership final accounts, the appropriation account starts with the gross profit figure. A gross profit is just the sales takeaway cost of sales. And that's incorrect because we need to then, you take away all your expenses. It's the net profit figure that you need to start with. So that one will be false. In a partner's current account, interest on capital is debited and interest on drawings is credited. Right, so thinking about a partner's current account, remember that's a sort of showing how much the partnership owes to the partner. So anything that's credited is the partnership owes the partner more, and anything that's debited means that the partner owes to the partnership. Right, so interest on capital, that's where the partner is rewarded for investing in the partnership. So that's money that's owed to the partner and therefore should be credited. Interest on drawings, around the wrong way, so false. Incidentally, my little tip for current accounts is remember that the debits are the D's. The D for debit, D for drawings, D for interest on drawings, and pretty much everything else will be a credit. Identify which of the following describes net assets. So net assets is right at the bottom of the top half of the statement of financial position. So it's going to be all of your assets minus all of your liabilities. So non-current assets less, no, non-current assets plus current assets, so that's all of your assets, less current liabilities, less non-current liabilities. It could be that bottom one. Oh, it's a bit of a mouthful. Complete the following statement. The purpose of the statement of financial position is to. Right, so it's not the cash position. That would be a statement of cash flow. Its main purpose, it isn't to show that debits equal credits. That would be the main purpose of a trial balance. Not showing how profitable, that would be the statement of profit or loss. I'm hoping it's the last one. Give a snapshot of the organisation's assets and liabilities at a particular point in time. Yes, and if you look at the heading for a statement of financial position, it will say as at this date. So it's what assets and liabilities have we got at this exact point in time, whereas a statement of profit or loss will say it's for the year. So it's all of our sales and all of our expenses for the whole year. So different focus. Lucy runs a jewellery and gift shop. She's a sole trader and the year end is the 31st of March X8. You're given her trial balance. The statement of profit or loss has already been calculated and the profit is 33,054. We could maybe go down and prove that. It's a bit sad, but I feel feeling the need now. So I'm doing 372,592 for the sales. Take away 71885. Incidentally, we could use a highlighter just to sort of say, well, we've dealt with that. So take away that, take away purchases, 222843. Take away opening inventory, that's sort of extra purchases in effect. Opening capital, take away other expenses. You don't have to do this, by the way. It's just me being a bit of a nerd. Oh, and then that's what happens with the highlighting sometimes. It all goes pear-shaped. So add 464 because that's on the credit side. So that's like profit coming in. Take away the 1078 and then add back the 11424. So I'm just kind of doing an ETB exercise there. Is that up right up to the top and then bank? So I've got 33054 in my calculator, which agrees to that. So I'm kind of just getting a feel for the question. During the year, Lucy made personal calls on her work mobile phone. The cost of these totaled £180, including that. Right, they're personal calls, so they're not a business expense. So it's asking to complete the pro forma journal below. Oh, this is better. So unlike the previous question, where it asked for a journal and it said balances here, now it is correctly headed up account. I'm hoping that's what they'll do in the real exam. So we need to adjust for this £180. So it's including VAT. So the first thing I'm going to do is work out what the VAT is. Bit of a clue because I was given 3 rows. So divide it by 6. It tells me that that is made up of £150 of phone cost and £30 of VAT. And how's the best way to explain this? Included at the moment in the telephone account will be a debit of 150. Included in the VAT will be a debit, so reclaim of £30. And the credit presumably would have gone to the bank. So what we need to do is take, look at that highlighter. What we need to do is take the 150 back out of those phone expenses. So we're going to credit the phone with 150. We need to not be reclaiming the VAT. So at the moment that will be sitting as a debit in the VAT control account. We're now basically cancelling that out and saying, well, look, we can't reclaim this because it related to personal use. And then the full amount, the 180, we're not going to reverse it from the bank because we did physically pay it. We are going to show it as drawings, taking something out of the business for personal use. Following the inputting of this journal, calculate the revised profit. Right, so we know that we had £33,054 of profit. We've just credited mobile phone expenses with £150. So previously we had subtracted that £150 to arrive at this profit figure. We're now effectively going to add that back to get a new profit figure of 33,204. Now, I don't have to do anything about the VAT and the drawings because, of course, they are not income or expenses accounts, so they are not going to affect my profit figure. Then we have complete the capital account for the year. So what's going on with the capital account? So let's go back up to our trial balance. So do I have a figure for capital? So I've got an opening capital of 24,580. Now I know that a capital account is a credit balance, so that figure will belong on the credit side of the capital account. What else happens? This is basically the same as the bottom of your statement of financial position. So we know that our profit for the year will increase the capital. And we have just worked out what that revised profit for the year figure is. That's a bit like when you've got your extended trial balance and you put that profit for the year figure as a credit item in the statement of financial position columns. Capital will then be reduced by the drawings. Now, drawings have just been debited with 180. Let's have a look and see what they were to begin with. We had a drawings figure of 28776 debit. We have just increased it, so add 180, which gives me a revised drawings figure of 28956. And then finally, we can show the balance carried down, which is the 57784 subtract 28956, which gives me 28828 as my closing capital figure, which should incidentally be equal to my net assets, which is my assets, all my assets minus all of my liabilities that we discussed previously. Using the figures in the trial balance, complete an extract of the statement of financial position as shown below. So we're going down to the net assets figure. So, non-current assets. The non-current assets is my fixtures and fittings. I've only got one lot of non-current assets. And I'm going to put the cost, the 6487, and I'm going to put the accumulated depreciation in. So the cost goes in here, 6487, the accumulated depreciation, and then I need to calculate 6487 subtract 4255 is 2232. Current assets will always be the same, so we will always have closing inventory, trade receivables, and bank. Unless, of course, we've got a bank overdraft. We might have cash in here. We could have prepaid expenses. We could have accrued income, but we're certainly pretty much always going to have these ones. Right, so looking at the trial balance, and I'm just going to get that up alongside it so I don't have to keep flicking backwards and forwards. So closing inventory here, 11424. Trade receivables will be the receivables ledger control account. And if there was an allowance for doubtful debts, we would have to subtract that as well, but there isn't here. So we're just going to put in the 14442. Bank, 35,042. And then if I just cast my eye down, I'm going to get my highlighter again. So I've dealt with, oh, for goodness sake, I'm not very good with the highlighter. So I've got the bank, I've done the closing inventory. If I had been able to successfully highlight when I checked before, Oh, I've dealt with that one now, haven't I? Haven't dealt with that yet. Opening inventory. So all of these expenses I dealt with when I checked the profit figure, if you remember. So again, you know, I'm making extra work here, but I'm just sort of trying to show you how it all hangs together. So I've put that one into my statement of financial position, and I'd already dealt with that one in my statement of profit or loss. Drawings, of course, appears in the capital section, so I'm happy that there's no missing debits that need to go in here. Current liabilities, so I've already dealt with the closing inventory in my statement of profit or loss, as my disposal went into my statement of profit or loss. I've already dealt with my accumulated depreciation up here. Opening capital will be in the financed by section, which I'm not required to do. Right, payables ledger control account. So that will be my trade payables. And I can put that figure straight in. So 30814. So remember, liabilities are going to be credits. So, and sales revenue was already in my statement of profit or loss, which just leaves me this VAT figure of 3468. Now, just remembering to myself that in an earlier part of the question, this is a bit naughty of them, I've credited VAT with 30. So the VAT figure will be 3468 plus 30. Which is 3498. Right, and again, from doing that highlighting, I can see that there's nothing missing, even though they've given me that extra row. Right, so let me just get rid of that now. Go back to the question. So my net current assets will be my 60908 subtract sorry, just being nosy how they'd set it up there. 34312. So that gives me 26596. And then my net assets will be my net current assets that I just calculated, added to my non-current assets. And that gives me a total figure of 28828. Now, beautiful. That agrees to the capital account that I completed previously. So I'm confident that I have done that question correctly.